in Vancouver, what's happened is our incomes have stayed the same, but the house prices have really gone up. And so now there's that bigger gap. Again, there's that wild card. Foreign investors came in with billions of dollars and changed the whole scene. So can we rely on it 100%? No, but does it give us an indication of what's happening in a market? Absolutely.
Well, and this is where the whole talk of a bubble ends up coming up. You might have heard people say, when is the bubble going to burst? Or what is a real estate bubble? Well, a real estate bubble usually occurs when people can't afford the house prices in a specific region, when their income doesn't support where the house prices are. So that's where bubbles start to get created. And so
San Francisco, for example, back in the 90s, so San Francisco, everyone was going nuts in late 90s and in the tech bubble too hit, but it was, everyone was going crazy buying these houses and it was just getting expensive, but yet their incomes hadn't changed. Nothing was different for that area. And so that's where they start saying, that again, a wild card is that consumer confidence. It just got too much and the frenzy and emotions got involved and a bubble hit. So if you'd looked at the affordability index in San Francisco back in that time, I can't remember what it was, but it was like, I don't know, 120% of people's incomes were going toward their housing, which again is not sustainable, right? Obviously not sustainable.
So one of the things that we would want to look for when it comes to an affordability index is we would want to look for one where people can afford for the real estate to increase.
Right.
That's what we want to look for. If we're going to buy for a long period of time, we want to buy and hold, let's say, and we want to own a piece of property for 7, 10, whatever many years. We want the ability for the house price to be able to increase and people to still be able to afford it.
Yeah.
That's the point of looking for the affordability index.
Once they can't afford it, we know that things are going to have to start going backwards. Right?
And this is the thing, and this is one thing I wanted to clarify just really briefly, because we talked about a bubble, and a bubble scares people. And then we mentioned Vancouver at 84% and Toronto at 66%. Does that mean that those markets are ready to crash? Well, what it means is the people that live there can't necessarily support it. But this comes back to the caveat that we were talking about earlier. The caveat is there's other things that can also, aside from economics, other things that can drive a market.
Wild card.
And they're happening in Vancouver and they're happening in Toronto.
So what does that tell us though? Let's say we're looking at Vancouver and we're like, holy smokes, 84%, that sucks now. Does it? Okay, so here's the deal. So when something hits in an area, let's say that there's people coming into, Metro Vancouver with, all this 84%, of their incomes. That's what they're going to have to do. Where are those people going to go? Those people start moving out further. Those people then move out further and further and further. So now, if we see that this is happening, does that mean that that's areas off our list? It doesn't have to, but do we then, again, as an indicator, look at it and go, oh, okay, so what's happening outside of there? Where are those people going to go? Where are the people going to go that are, have been there for 10 years and are realizing like, wow, everything's outpacing us? Well, maybe if we go out by half an hour or an hour out of town, and we can do that now, we're no longer young and, vibrantly eating out and stuff. We now have kids and we don't mind the yard and all that stuff. Plus, hey, there's a new GO train line or there's a new SkyTrain coming to that area. Perfect. I'll just take that into work. Now where are those spots? Where are those people going? Because they're going somewhere. We saw a lot of people go out to the island from Vancouver. Victoria really changed.
Or even deeper into the Fraser Valley.
Abbotsford.
And that's where those transportation changes are. And so this is where you start combining some of these things. We start to see, okay, it might be too expensive for an investor to buy in Vancouver. So let's start going outside of Vancouver, a little bit up the Fraser Valley, and where are some transportation changes happening along that way? And this can apply to any city. This can apply to any market that we're talking about. It can apply to Edmonton or Toronto or you name it. The point is let's just find out what the affordability index is. If it's wacko, which Vancouver and Toronto really are.
Why is it wacko?
That means that the towns around those areas are going to start seeing an increase in population because people they can't afford to live where they are, so they're going to start looking elsewhere.